Good morning and welcome to the ADS Securities Markets Update. Beginning as usual with the Asian session today, there were no economic releases, while the markets concentrated on the RBA monetary policy meeting minutes, which came in with more and more dovish remarks, leading the Aussie dollar to decline across the board and declining the most against the US dollar with more than minus 0.47%, reaching as low as 0.9355 so far. The RBA thinks that the Aussie exchange rate is higher compared to commodities prices, while the bank also believes that the growth rates will be weaker and below the trend in the next few months, while inflation is likely to remain within the bank's comfort zone. As for the European session today, there are a collection of economic releases from Italy, UK, Germany and the Eurozone, which is likely to have a notable impact on the markets. Beginning with the Italian trade balance today, the expectation points to a higher surplus toward 4.27 billion euros in April, up from 3.87 billion euros in March, which would be the highest since late September. In the UK, the inflation figures will be released. The CPI is expected to ease back to 1.7 in May, down from 1.8% in April. And during the same period, core CPI may also decline to 1.7, down from 2%. Furthermore, the UK house price index may rise further to 9.1% in April, up from 8% in March. In Germany, the ZEW economic sentiment report may rise to 35.2 in June, which would be the first rise after a 4 consecutive monthly decline, up from 33.1 in May. As for the Eurozone, ZEW also is likely to improve to 59.6 in June, which would be the first rise also since a 4 month, up from 55.2. Going forward to the US session today, we'll be focusing on inflation figures or inflation and housing figures. Building permits may decline back to 1.07 million in May, down from 1.08 in April, and housing starts also may decline to 1.04 million, down from 1.07 during the same period. Finally, CPI and core CPI both are expected to rise by the same rate of 0.2% in May. This is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economic releases, reports and analysis. Thank you for watching.